Welcome to Taking Stock with Lisa Brown. My special guest today is Carla Curry, a career executive in the risk management field. Carla has seen a thing or two in her almost 2 decades working with clients to insure against life's risks. And she's here today to share insights with our busy working professionals who serve on for-profit and not-for-profit boards. Welcome, Carla.
Good morning. How are you, Lisa?
I'm great. Thanks for being here, Carla. Now, Carla, I find that a lot of my clients are approached to serve on boards, given their success in their professional field. And while finding the time to serve on this board might seem like the biggest hurdle on their minds, there's also another lingering hurdle that they're not often considering. And that's, is serving on a board a risky proposition? So can you tell us why serving on a board could be risky to someone?
Serving on a board could be risky as there's a potential for both civil and sometimes even criminal actions that are brought against the directors and officers for a myriad of actions, whether it be simple poor decision-making, misleading statements, or failure to disclose information. Whether it's a technology company or just your homeowners association, there's always room for an individual or a class action suit. There may be a disgruntled or not individual who might seek the removal of an officer from their position for misconduct, breach of duty, allegations of embezzlement, or theft. It does not matter if these allegations are true or not. The risky part for you as the individual officer is the cost to defend those claims.
And Carla, you shared with me earlier a couple examples of claims that you've seen clients have to deal with. There were 3 examples. The first was a breach of bylaws. The second example was defamation. And the third example was misrepresentation. So I'd like to spend a couple minutes talking about each of these claim scenarios. If you could tell us a little bit more about the first one, which was what happened in the breach of bylaws situation.
Absolutely. Members of an association had filed a lawsuit alleging a recent election of a new executive director did not follow the correct procedures that were outlined in that association's bylaws. The members argued that the majority vote required was not obtained, and the bylaws were modified to suit the self-interest of the board. Those defense costs and the settlement alone exceeded over $75,000.
And that is a huge number, especially to have to digest personally. So that was a breach of bylaws situation, which seems like it could be a common occurrence. What happened in the defamation situation?
A longtime founding yacht club members had their privileges revoked. They alleged some of the younger board members made false statements and coerced the other club members into a biased voting position. They sued for defamation and non-monetary damages to restore their senior club member benefits. Through arbitration and settlement that was reached, it exceeded over $20,000.
So this is a social activity. This is a yacht club membership. This is not something where you are expecting to have some sort of, legal issue. It should be for personal enjoyment. So I think another common occurrence, people can think about their own personal situations and clubs that they belong to.
It's one of those things that I don't think people think about when they choose to serve on these types of boards.
Right. Fair statement. And then what about the third example that you shared with me earlier on misrepresentation? What happened here?
In this case, a nonprofit co-op was attempting to merge with another because of their financial difficulties. The surviving co-op requested membership information and the most recent balance sheet and the income statement from the distressed co-op. So soon after the merger, it became very apparent that the acquired co-op had overstated their sales and their membership enrollment. The board of the newly formed co-op felt misled and immediately sued the former treasurer, alleging misrepresentation. The prior co-op's insurance policy did provide the defense cost to that individual. That defense cost exceeded over $65,000.
Wow. I'll tell you, when I have heard you share this story, I had a personal reaction to that because I was serving as treasurer on a board that merged with another nonprofit due to financial difficulties. And I'm literally placing myself in that scenario thinking, goodness, that hit close to home. Fortunately, that didn't happen in our situation, but I can see, in a voluntary capacity, that is not something not a risk you would necessarily see coming, but it obviously happened to your client.
Mm-hmm.
Okay, so
and again, another situation that you don't want that coming personally out of your personal assets.
Exactly. Right. That's the last thing you're planning for. So we've talked about a couple examples of these risks and these claims. So Carla, what can we do to mitigate these risks?
So the simple answer is insurance. There's insurance for everything, and there are coverages for directors and officers to help protect against those decisions for both the organization itself and then those individual directors of those boards.
So the D&O insurance is really, that's something you've got to ask for. You've got to review it. You've got to make sure it has the provisions that it needs. So are there any gotchas that we need to be on the lookout when reviewing the D&O coverage that a board already has in place?
So number one for me is the defense costs. A lot of policies you might find the defense is included in the limit. It's basically reduces your limit of liability. So once that claim is brought and there's, we're going to shell out this $65,000, your defense costs might come out of that. So I would recommend always making sure that your defense costs are in addition to the limit.
Now, defense costs, and we've talked about a lot of examples here of defense cost, and to your point, that's a huge consideration. Any other gotchas in these policies that we need to be aware of, or is that the main one?
That's one of the main ones, because I find that sometimes people feel that, well, now I have no more coverage. And so then again, now that's coming out of your pocket, you don't have enough limits. The second gotcha I would say is, as I mentioned before, making sure that those individuals are listed on those policies and making sure that there is a full separation of the organization itself and those executive officers.
So I know, Carla, we've talked about some negatives here today about serving on a board and potential costs and risks. In your opinion, are there situations where an executive should just turn down serving on the board due to the personal risk involved?
Always admire those who take the time to serve on a board. It's not an easy task, especially when one is balancing home life and career. But before accepting a position on a board, my advice would be to have a risk manager or an insurance professional review the current insurance policies in place, as well as the financial statements and any history of claims that have been brought against the board in the past. At the end of the day, we have no obligation to step in and serve on a board. You can always just say no. I would say look to the bylaws for direction. My personal thoughts are also, if there's some ethical considerations that might make it difficult for you or the organization itself that's going to put them in a crisis, or if you recognize immediately that there is a lack of protections, at that point, you may not want to serve on it.
I think, Carla, that's such an important point, that as senior leaders in the business world, there may be some people that are really gifted at helping to turn distressed companies around or fix problems. But when you look at how you're serving on your role in terms of serving on the board and providing that expertise, you do have to consider the personal risk involved if it is a distressed situation, even though you might be very well skilled at being able to help out and turn the ship. It could have a personal cost and a personal risk associated to you. So I think that is a very well said point. And thank you for making that.
You're very welcome.
Well, I'd like to thank you, Carla, for joining me today and sharing your perspectives on the personal risk while serving on the board. Carla is a client executive with Rhodes Risk Advisors. And if you would like to speak with her to learn more about how to protect yourself, give Carla a call at 470-615 0720. And you can also follow her on LinkedIn. Thank you again for joining us, and be well.